Alright, yo, what's going on, guys? So today I just wanted to go over, basically the larger macro type of idea of giving yourself the best opportunity and really solidifying the idea of relative strength. We were talking about the moving averages prior, and just kind of like stacking the probabilities in our favor when the conditions present themselves. So, first things first is actually let's look at this Google Doc here. So we talked about moving averages, all of this. We kind of went over this. And now we're on to like what are the larger names telling us right now, like the dollar, yield, crude, seasonality, historical returns, etc. But we're not going to look too much into this. But like we're not going to look at crude and yields. But we're going to keep it simple. This video is just going to be very simple and straightforward, and hopefully it just strengthens the idea of putting probabilities into your favor. That's what I want to put out there. So let's go over to my watch list. As you can see, I have the indices, as we've seen before, futures, yields, and sectors, and some crypto. So this is normally what I go through every Sunday. I'll be doing this I'm recording it this Sunday, so I'll probably record this and then hop on the charts and go through everything, and this is exactly what I would do to like see if the probabilities are in my favor. So since we've already established the idea of trends and stuff, and moving averages, this will be very straightforward now. Kind of just again looking at the bigger macro type of view and putting the probabilities in our favor is the general idea here. The reason I have my face cam off is because I am outside right now, so I didn't really want the glare to fuck up the video. But basically the general idea is you're gonna go on DXY, the dollar, U.S. dollar index, and just look at the overall trend. Are we making higher highs, higher lows? Are we uptrending? Are we downtrending? Lower lows, lower highs? Where are we in this trend? What is happening? Just establish a basic idea. Because here's how it works. When the dollar is going down, DXY, the US dollar index, is going down, then the equity market, or stocks, like the S&P, the index, and all the names within it, you can think of like Microsoft, Apple, Amazon, etc., they will go up in price, and vice versa. So if the dollar is rising, then expect those names to go down in price. So that's just the general concept there. Just figuring out where the dollar is. Is it in an uptrend? Is it in a downtrend? How is the dollar performing? What is the dollar telling us? Because if the dollar is working in a bullish manner, then maybe we're looking at downside on the stock market. If the dollar is looking pretty dumpy in a downtrend, then maybe we could expect even more of a bull market, and we can take advantage and maybe position ourselves accordingly even better. So that's just the general idea there. Let's go back here. So seasonality / historical returns. One thing I wanted to go over in regards to that is there's a big thing people don't necessarily understand, and that is you want to try to grab your positioning on weakness, first of all. So you're going to be buying. Let's see. Let me move this a little bit forward. You'd be buying for the upside. So say if we have an uptrend, you'd be buying on this pullback. You're buying when there's weakness. So that's just one thing. You're buying when there's weakness. You're anticipating the strength to come. So just keep that in mind. Write that down as a note on a sticky pad. That's always very, very important to know. And furthermore, this is when you're like starting to actually dial in and really get good at understanding just general dynamics of the market, even just throughout the week. So normally, like Monday and Tuesday and through Wednesday, is days when you're going to be getting those opportunities to buy the dips. Normally, Monday is the type of day when you kind of overextend and you get the last push from the last week and you would sell the rest of your positioning. And then by the time Monday ends, the market's probably come down or reversed. And then Tuesday and Wednesday bases out again and you can get into your positions. And then Thursday and Friday, it runs up again and sometimes into Monday. So that's just the general idea. I hope that makes sense. It's just kind of like if you were to continue to do this for the last few weeks and or months, you would have seen yourself make a lot more money than somebody doing the opposite. So hopefully that makes sense. Sell into the strength on Friday, so you would get positioned on Wednesday or Thursday, and then you'd get a nice rally on Friday if everything works out. If you actually picked a good stock with good relative strength, it's above all the moving averages, it's showing good volume patterns, which we will go over in probably the next 2 to 3 videos. Everything's signaling, then you'll get the chase up on Friday. You'll sell into the strength, buy into the weakness. So if I'll visualize that again for you. So we have an uptrend, you would sell into the strength. So sell up here. Then you always buy when there's weakness if you're anticipating a position. So that's how that works. Write that down on a sticky note as well. Sell into strength, buy on weakness. But yeah. What was I saying? Yeah, so you would sell onto Friday. You'd sell into the strength on Friday. And you can leave a couple contracts or shares of whatever your position size is left over. And you could call those runners. And you could sell those on Monday if there's an extra push-up and overextension on Monday. And who knows, maybe you're swinging for a very long period of time out, and you don't even need to do that. You're just holding it through up all the ups and downs. But as of right now, when the market isn't necessarily like in 100% bull market and you can't just hold positions forever, it's important to understand to sell into the strength and take those gains. And there will always be new ways to position yourself come the next Tuesday or Wednesday when things start to decay, come back to baseline, and then go up from there. So give yourself the opportunity to understand that, look at the market a few times, like a week, and kind of just give yourself information and data to understand the pattern. So that when I'm saying this, it actually makes sense. Because I could say it as many times as I want, and you could say like, oh yeah, but until you actually see it, until you actually start positioning yourself accordingly, it's not going to do anything. So be sure to actually get some like exercise in regards to the examples and ideas here. Now, seasonality. So let's see here. There's like presidential election seasonality. So normally the first year of a president being elected is very bullish. And then post like going to years 2 and 3 of the president being elected, it starts to get relatively bearish. And then the last year is often relatively bullish. Now let's think of this from just a step back standpoint. Why would the last year of a president being in office be bullish? Because he's going to pump the economy in his favor, so it looks like the economy is doing a great job. So hopefully he gets reelected, and or somebody in his party gets reelected if it's already a second term. So there's just like some basic background information if that helps you digest that. Furthermore, there's seasonality in regards to like the kind of like sometimes dryness during periods of certain months. Certain months are more red than others. But it's important. I would say honestly, just if you're gonna look at anything, just look at like the presidential seasonality chart. I think that's very important, and I think that probably has the most influence in regards to positioning and overall trend, because that's just the bigger idea. at the end of the day. We're always trying to take a step back, look at the bigger picture, and kind of just simplify it for ourselves. So there, go with that. Now, what else did I want to say? Yeah, so us adding all these things together, you kind of figure out what year is it in the presidential election. It takes like 2 seconds. Um, as you know now, we are going into an election year, and we've just been getting an absolute ripper upwards. It's actually absurd, to be honest. But yeah, we're getting this absolute rip. And what year is it in the election? It's the fourth year, which is also supported by the data that the fourth year is normally bullish. Furthermore, since we know that, so we're expecting bullishness already. So this is when you also take just like a slight step inward now that you have the general idea. And you're like, okay, well, where's the general market in regards to the moving averages? Are we trending above? Are we respecting them? Are we above the 250, 20, 10, etc.? Okay, we are, then I'll position myself accordingly to the upside. Is DX, oh my god, is the dollar in a fluid, consistent downtrend? Okay, then I really feel comfortable positioning myself to the upside on equity or stocks, and I might not just take those gains on Friday and Monday, and maybe I'll hold a little bit because I think the rest of the week there's a better probability it'll keep going up. You know what I mean? So these are just kind of things you're going to want to think about. How's the market doing as a whole? Are all of the indexes or indices above all of their key moving averages? Is everything looking super bullish? Like, can I really hold these positions? Is everything looking good? So there's just some things to think about in regards to stacking the probabilities in your favor from a macro perspective. And yeah, same thing goes for sectors. After you analyze the indices, then you can go on to the sectors. What sectors are popping off? Okay, XLV looks like it's possibly coming back up, reverse. We just made a new higher low, higher high. Possibly looking at another higher low here to make it higher high. XLK is absolutely booming, going to the moon. So what kind of names do I want to get in here for this next cycle? Do I want to get into XLK because it's absolutely booming? Do I want to get into XLV because it looks like it's going to reverse? Do I want to get into software because it's looking like it's going to reverse as well? It just broke about all of its moving averages and it's trending upwards and looking nice. Well then, yeah, maybe consider it. So those are just some things to stack the probabilities in your favor, looking at the general macro idea, and kind of just making it simple for yourself. When am I selling into the strength, or when am I buying on the weakness? We have Tuesday, Wednesday, Thursday possibly as the weekdays. Thursday's not normally relatively that weak, but it could be. Am I buying into the weakness on those days? Do I have good stocks from good sectors to buy? Are the indices also telling me that? Or are only some of the indices telling me that, and only some stocks are really flying? And should I be taking gains with such like a passive idea, or should I be aggressive? You're gonna want to be more passive in these moments when everything's not aligned, when the stars aren't perfect. So just understand that. And I didn't really obviously go over too many charts today besides explaining the dollar, but there's a reason because of that, because it should be simple at its truest form. Just take these ideas, implement them into your general like journal, write it down, start thinking about it, and implement just everything that was talked about in here over the next. This will probably take like 2 to 3, maybe a month or 2. Who knows? Of time to kind of just like see the data play out, if you know what I mean. And you can always go back and look at the hundreds or thousands of candlesticks in the past. So yeah, there's that. And as always, every Sunday, make sure to get on there when you're charting and throw up the weekly chart. And if it's the end of the month, then get on there and throw up the monthly chart, because you can also always do analysis off that. So don't forget that. Hopefully everything in here helped. This is just a general idea from trading with the trend, following the trend, trend following, being able to speculate in a successful manner, and seeing where the probabilities are stacked and how are you going to use them to your favor. And if they're not fully in your favor, how are you going to play around that? When are you going to position yourself, etc. So yeah, hopefully this was simple enough. I didn't want to kind of what's it called, put too much on the screen. I kind of wanted to just talk to y'all because I think that's very important to get across. But yeah, hopefully everything is transparent here, and that helps out a lot. Those definitely helped me out when I remember I first started learning. So yeah, hope you all have a good day. Go outside, go lay down or something. Just look at the sky and try to just think of things in a simple term. Connect some basic ideas in your head, and yeah, just enjoy life. Stay happy, my friends, and have a good night. Have a good day. Bye bye.